Good morning, Quasar Markets Live. So happy to be joined like I am every Monday and Wednesday at noon with Agnieszka Wood, our trading mindset coach. Agnieszka, how are you doing today?
Doing good. How are you, Howard?
I
I'm
am
doing really good.
fantastic. And I am very excited because we're going to talk about a subject that you and I both have a lot of love for. So let's get right into it.
Trading is just like playing tennis. Always prepare. Make sure you are ready to play. Your routine informs your whole body that you are ready to perform. After every stroke, you have to reset and get back to neutral. And don't get too biased where the ball is coming from because you might end up being wrong. If you're going to get upset and frustrated about missing the ball, most likely you'll miss more. To build consistency in your good habits, you need to repeat them over and over again. If you are trying to move forward, keep looking back. For example, at whatever happened yesterday, you might run into obstacles. Chasing the ball will just make you tired and frustrated. If you muscle up, you'll have too much tension coming into your stroke. And most likely you will not be able to execute your stroke properly. So don't try too hard, relax, and get everything off your mind that might take your focus away from being present. Enjoy the game. If you lose, at least you had fun. Trading is just like playing.
I love it. You hit
Always
so many
prepare.
important things there that we need to talk about. And, it really is true. If you spend all your time looking at what you just missed, you miss the opportunities in front of you, right? So that would be where I'd sort of start there.
Totally. You say that's the biggest thing in trading. Really, it's like in every sport, right? It's about the timing. And in trading, when you are out of sync with the market, it's all about the timing. Staying in the present moment gives you the best opportunity to see what is happening in the market. And looking back at your losses, just like looking back whenever, like if you want to go forward, don't look back, you might trip and fall. But if you keep looking back at your losses, you are missing the boat. You are missing the timing of the market. The market is always moving forward. So if you stay with your thoughts, ruminating about the mistakes you made, you are out of sync.
Absolutely. I couldn't agree more. Like you said, it's a perfect analogy with tennis because when one point or one trade ends, you need to clear your mind. I can speak from experience, and you need to get yourself ready for the next point. Like you said, you got to get back to neutral. You got to get your head in the game, back in the game. And that's how you can tell a good tennis player the same way you can tell a good trader, right? Would have a lot of the same characteristics and the ability to have sort of the short memory when it's required and the ability to focus on the task at hand is what I sort of take away from that.
Yeah, and it's the muscle memory, and in this case, the mental muscle memory as well. And it's so interesting that I just found out that you have actually a lot of experience in tennis, where I don't. I play since 1 year, maybe a little bit longer, but I am doing my best and practicing a lot. And what really makes a difference is, just like in trading, when I am not trying too hard and when I focus on the ball. And like literally, I would stand there and tell myself, focus on the ball, follow the ball, follow the ball. And literally, when I just follow the ball, the rest of the body is just doing what is already knowing what to do. The moment that I start thinking about what I'm doing, how I'm doing, like I have to get the ball, oh my God, what's going to happen? It's not working. It's terrible.
Yeah, well, you just hit on it. We talk about it. So some of it's pushing too hard, right? When we don't let things come naturally come to us, we try to attack them, so to speak. It's not always the best way, and that's true for tennis. You stay. For me, it was about a foot behind the baseline, wait for the ball to get to me to be at the right spot to swing and hit it. If you try too early to come to the net, what happens? The market goes right by you, right?
Right. You know those like the easiest shots, like either the overhead, it's just coming to you, and you go like, this is gonna be beautiful. And the moment you muscle up and just either too hard or it's like those most easy shots we miss because we are getting too excited, or we muscle up too much.
Or you freeze up. Yeah, exactly. You freeze up. You just,
yes.
you know that, yeah, this is it. I'm this is when I have to, I have to get in. And we always say, you don't have to do anything.
Right.
This doesn't have to be the shot that wins the match. And usually it isn't the shot that wins the match.
And that's so cool what you just said, because you just said, this is it. And it's almost like, when I was growing up, we were talking about, don't say, like when you jump, we would say in Polish, hop, like even to the kids, right? And we say, don't say hop before you jump. And this is the same thing, like before you hit that ball, don't tell yourself, this is it, because you are taking a step forward before you actually do the action. And in trading, that happens so many times. We get into a trade, we see something, we're like, oh my God, this is going to be good. This is going to be good. And then we lose connection with what is actually happening.
Right.
Sometimes we're already spending the money we haven't even made yet. And then
absolutely. Yeah.
And then when the market turns around, it pivots. We are not willing to pivot because we have already told ourselves how great this is going to be. And now we have to say, oh, we were wrong. We are disappointed. So we are trying to fight it. And that's where things go wrong and get out of sync with the market.
Absolutely. And I think another part that I like in the, comparing the two is when you go to hit a tennis shot. So, I get a forehand coming right down and I want to hit it cross court. I know when I do that, what is most likely going to happen next. And I prepare for any of those things by, again, getting back into a ready position before it comes, but also having a plan. If X happens after I do this, this is my next step. And not enough people do that with trading. So everybody prepares for the, I'm buying Apple at $100 and I'm going to sell it at $130. That's great. But what if Apple goes down to 96? What are you doing now as a relation to that? So, it really, I like the analogy because it's very similar into that you can't you want to get yourself prepared because not every trade or every shot goes the way you expected it to go. And then you have to be ready to prepared to play the next hand dealt to you.
Yeah, it's almost like, in a way, you shouldn't go too far out with being too happy it's already happened. But then on the other hand, you have to plan up front, like what is it that you will do? Because even with triggers, like when you prepare yourself for the day, what if I have a great day and I get to over enthusiastic? What am I going to do? What is my backup plan when I start feeling that I am now getting into a mode of, I'm a Superman, everything is going great, I can now win every trade, right? Well, what is your scenario? How are you going to deal with that?
And as you said, the same way as it with trading, it's when you hit that lucky shot and you go for the perfect winner and it happens. What I would find in my own game was then I went for that perfect winner, relied on it too many times, and it doesn't always happen, right? So you want to give yourself that room for error, which for me sometimes would be my trailing stop or my stop loss on a position is there just in case I am wrong.
Right. And it's just so easy to lose focus. Just like in tennis, when you are trying to make a perfect entry, right? In trading, you enter the trade in the perfect moment. And then you sort of like, you're so like, oh my God, this was great. But then you're losing focus and now you mismanage the trade. Yep. I have it very often still because I'm learning serving. Like, a lot of my serves, they don't even land where they should. And the moment so I start playing the game, and then the moment that I actually have a serve that works out, I'm like so happy that I'm like, oh, and the ball is already coming back.
They've already returned it. Absolutely.
Like, oh, and now I lost the point. Even though my serve was good, now I lost the point with the rest. So mismanaging the trade after.
That's so absolutely is so important. We talk about it is, and part of that, I think, is having a game plan like you do, like when I did when I would play tennis. I knew the person either had a strong...
I don't yet.
Yeah, but you do. You just don't realize it. So whoever you play with, whether it's your husband or someone a lot, whether his forehand's better or his backhand, and you play accordingly to that. You might not have the best ability to put it there, but you are trying to put him in an uncomfortable position.
That's true.
And that's what we're trying to do to the market, right? We're trying to put the market in an uncomfortable position. It sounds weird to say that, but we talk about it a different way. Steve always says, right, I want to be the guy that's taking the tickets when the people capitulate, and when they leave the market, I'll buy at the low. And then when you want to get back into that stadium because Agnieszka is playing tennis and it's now sold out, I'm going to charge you extra to get in. And that's what's so important. In the same way with sports, is having your plan and taking advantage of the weaknesses in the market. And the weakness in the market might be a misvalued stock that people, right, have a bad thing, or, there's a million different ways to look at that, but they all fall into the same thing, is that we're looking for our edge. And your edge could be, that you're great at making entries, at picking that right spot. Right. But if you're not good at then picking the exit, right, it doesn't matter. We can all get into a trade. We have to be able to properly get out of the trade. So I would compare it to that also.
And I think it's so important to understand also what your weaknesses are and what is it that you are great in, right? So that you can build on that. You don't have to be great in everything. And what is really cool about trading and tennis, but not many traders really take it in and accept it, is that first moment, that first game, like, you don't need to win it, right? It's almost like those first moments is a warm up. Right. So give yourself the time. Don't go in there and just jump full in. Just take the time. And even if your first trade is not working out, just like you lose your first set. Yeah, we just saw it in the tournament in California, just finished yesterday. You can lose the first set, doesn't mean you won't win the match.
Right, and exactly. And just because a trade goes opposite of your initial entry, again, if it's within the parameters or the game plan that you've put, and if you have a proper game plan, it makes it easier to follow through on. And I think it's a great analogy, because again, at the beginning, the first few points, the first few games of a match are usually felt to feel out the opponent, right? And we don't look at that enough when we trade, that, we feel once we push that button, it needs to go the way that I needed it to go, whether it's up or down, because you could be short in the market. But whatever it is, and that's not how it works. In other words, again, if I'm playing a tennis point, I don't lose the point until I either hit the ball out or don't get to the ball, right? And that person can have me running side to side for a little bit until I get, my game plan actually works out and things come your way. That's the same for trading. Is, again, I see so many traders that are so quick to get pulled out of their norm and do that. I got a question here from Market Shark, though, that says, is it okay to act on your instincts?
It really depends a little bit about how familiar you are with your instincts, because there is a dimension to it. And I have a whole podcast about intuition. If you go to Confidence in Trading podcast on major platforms, you can hear the whole thing. I discussed it with Greg Siglinton. I'm trying to think. He's a perspective coach, mindset coach, perspective coach.
And just so you know where to find it, I just pulled up
Agnieszka's on my website
at Head Coach. And right here you have her podcast.
Yeah, logic and intuition. Because instinct, so I think what's important to understand is that on the one hand, instinct, our automatic responses, which are the reactions to subconscious programming, can often feel like an instinct, because it is so subconscious that it feels instinctual. And now the question is like, are you getting triggered and you think this is your gut feeling, this is your instinct, and you repeat the same behavior as you always do? Or is it really that gut feeling where you feel grounded, where you have actually an insight from, so to say, from the inner,
or even from your prior experience, I would say. In other words, you just have, it's Steve does it a lot, Big Beat, where he scares me because he'll say, I feel like the bottom's in today. I'm jumping in this, as we tell people to make sure you have X, Y, or Z before you do it. But because he's been trading for 40 years, he can, he's doing it by looking at advanced decline, the tick, 3 or 4 things that he keeps on his charts, but he's not telling us that, to him, he's saying, it's there. So I think it's okay to use instincts, but I like it better what you have on your thing here, your intuition versus your instincts. I think would be sort of it, is that an educated, proven sort of feeling. If you've had that same feeling a dozen times and it always seems to go this way, that is something that's built up, as opposed to, I don't want you to use a guess. I guess I'm trying to define instinct, because I do think sometimes people don't, they think instinct is just my first reaction or my first decision. And that isn't really an instinct.
And that can be that is the reactive nature. Right.
Reactive instead of.
Yeah. And when you react, you have to be aware whether you are reacting to an impulse that is triggering your mental or your emotional trigger, and now you're being reactive, or is it really an impulse that has to do with everything that you have experienced so far, everything that that, like Big Beat, he's looking at all these things, but he might be not even aware how he's all putting it together, because he has done for so long. Right?
He doesn't, because I see him do it every morning, and I know exactly what just happened, because I see what he's looking at, and I know what he just talked about, and then boom, he gets to that decision, and he used 12 data points to make that decision. But with it, and I would also guess that I would say is that where I find it has worked is when you start to see patterns in yourself that sometimes come out, so that you can you tell whether it really is an instinct or it's a reaction. And I think that's important, that so I guess the answer we're both sort of getting towards is not really. Like, should you go with your instincts? Not really, unless they've proven out over time that they're right more than wrong. And that's before you start trading with those instincts. In other words, if you looked at today at this and I said, I feel like this is going to happen for the following, and okay, it did. Don't trade at day 1. Okay, now I look at it and I see what happens on day 2. Okay, then maybe day 3, I start to wet my whistle and get into it, because I see it happening. Because what I don't want people to get into it is, my instinct is to triple down or double down or do this. No, then you don't want to follow your instincts. So it's a tough question. I think it's a little too generic for us to give you an actual.
Yeah, I think it's a question that requires another question. It's like, what do you mean instinct? You know what I mean? It's like,
if you are here to answer that, we will answer for you, Market Shark, if you can answer us that. But I think you need a little bit more there as to instinct into entering a trade once you're in the trade. Or when to exit the trade, or what you're sort of looking at there, because it could mean different things to different people. And I think, that's what makes it a little hard.
Yeah. So you see, like, let's say our instincts as a human being are basically to fight, flight, or freeze, right? This is our automatic response. This is an instinct. I see a lion and I run for my life, right? The instinct that is shown in the market is.
That's going to be my decision.
The instinct that our natural instinct is to protect ourselves. So in trading, it can be, you see that you are about to lose, and your natural instinct tells you losing is bad. Do not lose. Fight. Add. Do not take that loss. Move your stop. A lot of times this is the instinct that people have, and that's why they get into trouble. Now, in the market, in fact, you have to go against your natural instincts, becoming sort of against your nature, because your automatic responses are not working for you. In order to do that, you have to first build the knowledge of your triggers. And that's what, that is the first step of being aware of how the market is triggering me is crucial, because then you can actually say, I see this. This is how this is impacting me, and this is how I want to react to it. Now, is this what you mean instinct? And is that reaction really in your best interest? Because some people say, yes, but I felt like it's going to turn around. That's why I doubled up. What do you mean that you felt? How does it feel that the market is going to turn around?
Exactly. That's why I didn't want to commit to saying yes, because I've seen intuition work, but it's more intuition than instinct. where a trader really has an informed decision that they're just sort of making that to everybody else might not be intuitive, but to that trader is.
I would really recommend to listen to that episode on the podcast, because we define really very clearly of, like how does the difference feel between your intuition and
that's episode 50, if I'm not mistaken, right?
Yes. And you can go to my website, or you can just go to your platform of like Apple Podcasts or whatever platform you're listening, and look for the Confidence in Trading podcast.
Absolutely.
One more thing that I was thinking, like since we were talking about comparing trading to tennis, one more thing that is very common for traders to do is to look at traders that are already professional, that they are already making money, that they are consistent, right? Whether it's on social media, on YouTube, or wherever, and then think that if you do the same, you will also have the same results. Now, I'm watching a lot of tennis. In fact, next week
I know where you're going here.
I'm going to Miami Open to watch more. And every time when I watch, I think, like I imagine myself doing that move. I really think like, okay, next time I'm going to try that. And then I'm going onto the court and I record myself. And when I tried it in my head, it looks the same. But I can tell you, I do not get the same result.
Right. Absolutely. That's the key is the self-awareness of what is actually happening to what we think is happening. And that's true in the markets, though. That's what you want to make sure is the market turning, does something, is something changed? One thing that I will say that where to me, your instincts or your intuition do, if you feel that the market's all of a sudden changed from where you were, where you entered a trade, then that would be to me a different story. And yes, in other words, if you are no longer comfortable with your thesis, you should exit whatever trade it is. And that's just a basic rule I don't have to think much about, is because if you're not comfortable, it's either A, you didn't really trust your thesis and you don't really trust your thesis, so you shouldn't have made the trade, or B, you put too much money into something that you really didn't feel that much conviction about. So that's the only time that I would say that I always follow my intuition. When I get nervous and it doesn't feel right to me, and I'm in a trade, because I set parameters already to not lose too much to start off with, I'm comfortable saying, hey, you know what, this isn't the trade today for me at this time. Let me get out and let me reanalyze what I was doing. So that, and that's the same way with tennis is, again, I might have the best strategy. I'm going to play Agnieszka, and I know she cannot hit my lob. My topspin lob kills her. And all of a sudden I hit my first 4 or 5 topspin lobs, and you're just drilling them by me. I'm going to say, whoa, wait a second. So obviously Agnieszka has been practicing topspin lobs. The same
or watching
way
a lot of tennis.
Might have been moving in a direction and no longer is moving in that direction.
Right.
So I'm going to change my strategy. And that is another thing that I'd love to touch with a little bit with you is, is playing the market in front of us and the ability for one to change sort of their trading. I don't want to say styles, but understanding the market to change their trades. Because there are people who only trade up, who only trade long, who don't have either A, the ability because they don't have an account that's set up for shorting or whatever, or B, it's their personality. What would be some advice you would have for someone there that has trouble moving from a predetermined sort of bias? Can you still be a successful trader under those circumstances if you sort of directionally set yourself up?
It depends a little bit, because yes, I think you still can. But even though that you are just one directional trader, you still need to be adaptable. It doesn't mean that you have to switch the direction, but you cannot get stubborn and trying to trade in your direction while the market is not going in your direction.
You can't force your trading style on the market, I think, is a great takeaway. That was one of the things I sort of thought. I love it that I heard it from you. Makes me feel better and trust it. But that is so important, is that, you have to be adaptable. And what a lot of people don't realize, I know we're getting a little off the track, is that you can still be short by just buying an equity. In other words, there are ETFs that are actually set up to the short direction. So if you only have the ability and it's just how you read charts, you can do the inverse. There is ways to go short without shorting a stock. So I do want to point that out to our traders.
I think either way, however you trade, whatever direction you trade, the most important thing is that it's like, this is the reason why I'm doing it, and not just don't get stubborn. And if it means that, okay, the market is not set up, whether it's your direction or your strategy, because you can trade both ways, but your strategy might not be working for a certain market environment. You've got to be able to pause and say, wait a minute, I got to rethink this, right? There is nothing wrong. It is actually your responsibility as a trader to stop and rethink that.
Right.
And constantly see, okay, what's working? And when you are getting, like you were mentioning, you are in a trade and you don't feel comfortable, it's okay to get out, because if you are not comfortable, just think about how will you manage the rest of the trade, right? Or if you are suddenly in a trade and you're like, I thought I was long, now I see I'm short. Just get out. It's okay, even if it take a small loss. Don't try to salvage this.
Yeah,
because
no one goes 1,000% or 100%, whichever one you want to use. We talk about it all the time, and I think traders get too hell-bent on that type of philosophy. And sometimes the market just doesn't fit your trading style, and it might just be for that day or for that hour.
Exactly.
Don't be afraid. You can always re-enter it, and if your thesis turns out to be right or there. But I've just found too often that what happens is when I get that feeling and I'm already second guessing a trade, managing that trade becomes exponentially harder to actually do it correctly. I mean, I can manage the trade, don't get me wrong.
No, of course. I always say, like, if the trade if it becomes too difficult, it's not supposed to be difficult. If it becomes too difficult, it means you are fighting, you making it difficult.
Right.
Don't make your life difficult. Just stop, regroup, and start over. When you are sometimes, when you are watching a setup, right, and now you're like, okay, perfect setup. And you enter, and then the setup proves itself not to be valid. Stop trying to see what's not there. Oh yeah, but maybe now. It's like, what are you doing? Have very clear parameters that tell you, even though it looked great, now it's not valid.
Yeah.
It's okay when it's not valid. It's not your fault. You don't have to blame yourself for it. Sometimes setups are not valid. Just like breakout can be a fake out. Don't try to trade a breakout when it's not breaking out.
Yeah, absolutely. Or we talk about it. Don't bend down to pick up a penny in front of a steamroller. Yeah. You see so many people that, it goes away from them and it's turning and now it's dropping and you can see it's dropping and it isn't going to stop, but they're still so steadfast that I can't be wrong. And it's going to, it might not change right this second, but in the next hour, it's going to change, or in the next day. That's where traders burn out their entire accounts.
Yeah. And maybe it will, because, we said everything is the timing. So eventually it might. The problem is like, how long are you going to be in there watching it and then losing your emotional capital, because you will be watching it and thinking, it's like, oh my God. I can guarantee you that it is not easy for many traders to be in a losing trade and then trade successfully next to it, watching this losing trade with one eye. I mean, I've been there. Like, I would lie to myself, having losers in my account. It's like, oh, you know what? In the meantime, I'm just going to trade the other. In my head, there was always watching those losers.
Right. And I have to make up for it. I'm going to make up with this trade for my last bad trade that I'm still in.
Exactly.
Those are the common things that we see time and time again, from retail traders. So it's so important to keep an eye on that. Agnieszka, I know we've kept you here already a half hour. I try not to monopolize too much of your time, but thank you so much for all that you bring to us. Everybody,
Thank
please
you.
make sure you go and sign up for Agnieszka's free newsletter, for her habit tracker. I can tell you what they've done for my trading, and I had years of experience going in before I met Agnieszka, and she has made me a better trader for sure. I am sure she will do the same for you. Thank you so much, like always.
Thank you, Howard. Thank you, everyone. Have a good day.